Hello traders, welcome back. My name is Evan Hornsey, market analyst for YouTrading, and today I'll be looking at how I use the Fibonacci tools. Okay, I like to try and keep my analysis clean and simple. I also like to work from a higher time frame. So say if I'm going to be writing about the daily time frame, I'm going to start with working out my bias on the monthly and the weekly. So here you can see that this particular asset, since the 80s, as in 1980s, as we're traveling from the bottom left-hand corner to the top right-hand corner. So overall, the DAX has been moving up in a bull trend. On a weekly chart, we can see that, we had a big pullback for coronavirus. And then since March 2020, we've been moving up in highs and higher lows. On the weekly chart, we can see that this close here is actually below this swing low. So there is a potential that everyone that was bullish from March 2020 might be about to take some profits, and then we could maybe see some sort of retracement. And that's where the Fibonacci can come in as a useful sort of tool to work out, where prices might go. So if I just go back to say the monthly and just demonstrate what a Fibonacci retracement and extension looks like. There are other tools within the sort of suite of Fibonacci tools, but I don't use the arcs or ellipses or fans or zones. I just keep everything simple, keep it retracements and extensions. So Fibonacci retracement, just using the standard levels that you find on the Active Trader platform. Anything below 50 is a deep retracement as far as I'm concerned. If we only get, say, a 23 or 38% retracement and then a new swing high, just say in a bull trend, then I'm thinking that's an aggressive pullback, so a real buy the dip moment, and then an aggressive breakout. And I'm just looking for that move to sort of finish quite quickly. If we have a big slow move down to the 76.4, and then it takes a while for price to break out to the upside, then all that momentum is a bit like a freight train. It's going to take a lot longer to sort of halt. The buyers have been building and building, so we're going to get a longer move. So I'm just going to demonstrate that with a trading range that broke out. So we had a swing high over here for January 2000. All the way down to 2003, swing low. And you can see here we had a breakout and then a pullback. So if I just slip this down here, so from this swing low to the breakout swing high, here you can see 76.4% retracement, and then a big slow move until 2013. Then we break out and all that momentum have built up, and we've had basically a move up ever since. Right. In terms of extensions, once we know where the trend range is or where we've got a pullback, we can use the Fibonacci extension tool. So Fibonacci extension tool here. Like I said, this was a trading range, so we had a swing high, swing low. So one way I use it is to look for measured moves. So you can go from the low of the range to the high of the range, just slip it to the side, and then you can print out a measured move here, and that takes us up to 2018 and around 13,000. Or if you feel that you're confident that we're in a bull move, this was a big pullback, like I said, down to the 76.4. So we've got a swing low, swing high, higher low, and now we're looking for higher highs. We can start to look for a Fibonacci extension that way. So you go from the low to the high to the higher low, and again, confluence up to the 13,000, 161.8% Fibonacci extension. That's a great target to sort of aim for. If you had got in 3,900, that'd be amazing, obviously. But if you were just to buy the breakout, then you've got some sort of measured move of that range to look forward to, or this Fibonacci extension to look forward to. All right, so that's Fibonacci retracements and extensions. If we just move in a bit closer to current time periods, obviously, like I said, 2020, big move down, big break higher. Maybe there's a call for people to start taking profit. So if I just clear all this off, with Fibonacci, kind of looking for confluence of sentiment and fundamentals, and you're also looking for big figure numbers. So we just try and find 14,000 on here. So 14,000's there, 15,000 around here, and 16,000 is about there. So here you can see that, we've been basically moving up in those sort of ranges. currently between 15,000 and 16,000. It could be, some traders might be thinking this is a bull flag. So it could be a case that, you've got these highs here and these swing lows here, move up, consolidation, break out to the upside, which would be great. But for those that are looking, for the potential of a pullback to sort of value, maybe down to the 14,000 sort of zone, we want to sort of get in as high as possible on a move. So I'm not talking about a 38.2% retracement on, we want a big deep retracement and then a potential move to the downside. As we go to the weekly chart, just get rid of this. So you can see here that using Fibonacci retracement, we've got a swing high, a lower low, then this swing low here, and then 61.8% comes in here. So if I just put that there, and then if I go down to a daily, we can tighten these up. So we've got this swing high here, this swing low here, and then the 50 to 61.8% retracement is there. And you can see yesterday's price closed in that range, and currently today's price is coming out. So for those traders that do think this is not a bull flag, this is actually a topping pattern, then they'll be looking for 15,800 to hold, and then we should be targeting this swing low here and this swing low here. So if we can get through 15,000, then like I said, we could be down to 14,000. But if I just get rid of this particular retracement and use an extension, you go Fibonacci extension, swing high to swing low to known pullback, and then look for the 161.8, and you can see that already, we're around the 14,000 sort of level. So yeah, for traders that think this move to the upside is sort of overdone, crowded trade, we want to take profits. The buyers are the first to sell. So if these are all buyers, and then we sort of see this structure here get taken out, this move here could have been buyers selling out some of their position. This is latecomers coming in, and then if they can't get above this swing high here, then the sellers are going to sort of take control, and they're going to start pushing prices down until the buyers find that prices got cheap enough again for them to step in. So that's why I'm saying this 161.8% retracement, extension to the downside, down to the 14,000 into this balance area here. So you can see here, we had that sort of market structure. We had traders battling it out around 14,000, and then the bulls obviously overtook the sellers. We had this big sort of impulsive move to the upside. So another reason for that sort of move to the downside to stall out is because there, potentially there's going to be some buyers still left here. So hopefully that makes sense. Using Fibonacci retracement to find levels where traders might step in, and then Fibonacci extension tool to see where they might take it. It's how I use the tools. And obviously, if you're using trading ranges, Fibonacci and all that sort of thing, then when you're wrong, because at the moment, if I'm saying that this is a move to the downside and my stop's up here, if that gets taken out, then it's clearly a continuation to the upside, and the higher time frame sort of move is going to continue just based on this moving from bottom left hand corner to the top right hand corner. All right, I hope that makes sense, and I'll speak to you again tomorrow.